Well, good morning and happy Saturday, active traders. I'm Ken Calhoun, your host, coming at you live straight out of Colorado Springs here on Saturday, June 2nd, 2018. Markets have been recovering lately. It's really important in a sideways market to have a stock pickers and other instrument pickers approach where you're looking at very strong charts that are doing well in spite of a sideways market. We're going to take a look at those charts coming right up. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by watching this you agree to not make actual trades. If your trading losses ever make you or your family say, what the heck, there's got to be a better way, let's take a look at things. Your goal, your personal goal should always be to extract as much money, to grab as much money out of Wall Street as you can. My goal is to help you get there sooner rather than later, and that's why I got so many thousands of you working with me. I appreciate the epic turnout. We're at a record 5,278 of you who registered for these. So we're almost closing in on 5,300 resistance. So good to see so many of you here. Our traders of the week, I just wanted to acknowledge what I call my trading heroes. And those are those of you who participate actively in my premium services. Sandra had a really smart observation or question in Swing Scans a week ago. And Arthur had a really good comment for our Trading Open Live room this past week as well. So thanks to Sandra and Arthur. You can get a discount off annual membership. Just hit me up with the support ticket and I'll give you individual links to use for that if you want. So our quote of the week from Thoreau is, it's not what you look at that matters. It's not what you look at that matters, but what you see. You know, it's not what you hear, but what you listen to. It's not what you look at, it's what you actually see. And in trading, it's very important because as a trader I see volatility and I see trade potential, and as you evaluate your charts I want you to start looking for the strongest breakout charts that make sense to trade, and we're going to take a look at those coming right up. First, our coaching tip of the week, and then we'll hit up our charts. Avoid false breakouts in our ongoing series of coaching tips. Part 2. One is look for 45-degree angle charts. A good example of that is in one of our winners of the week for my Swing Scans members, I've been calling Holly Frontier HFC long. Do you see how on a 2-month basis it has a nice 45-degree sustainable angle? That would have been easy to position size or scale into or build a position into, just adding incrementally 50, 100 shares here or there. This is where I told my members to get in long, and boom, we're off to the races. So that's one of our winners of the week for our swing traders, and that's one of the points I wanted to make, is it's got a 45-degree angle chart. There's a couple of more tips coming up in 25 minutes for my Swing Scans members that they will get private access to as well. So be sure to join Swing Scans if you're not yet a member. Let's go ahead and take a look at our markets and see what the heck's going on. The S&P showing a little bit of relative strength lately. You can see on the 90-day daily candlestick chart. It's kind of hovering around that 100 simple moving average. It's not really strong in terms of directional moves. It's still a sideways market, but it's shown a little strength the last couple of sessions. Our R1 trigger is still up at 27.52 as it was the last 2 weeks. I'm still waiting for the breakout before I scale in long in my own capital trading accounts. I'm carefully doing some stock picking here and there though along the way, and you'll see examples of those charts in just a second. So 2752, that's our R1 resistance level that we want to see if the market, like Kilroy is here, poked its way over resistance. 2752, that's going to be your R1. S1 is going to be 2668. 2668. Who can visually tell me why 2668 makes sense for a support 1 trigger? What technical signal am I waiting for the market to lose before shorting the market? And join me for coffee or tea if you'd prefer. All right, Mira's got it, the 50 SMA right there. So we got a 50 simple moving average right near 2670. So I want to see if we're able to break under that. So again, welcome aboard. This is our S&P doing kind of jack squat, doing not much of anything. Big picture, it's been a sideways market. You've got to trade those breakout charts with good, strong directional bias in spite of a choppy stock market. Let's take a look at some examples, shall we? First up to bat is TRIP, T-R-I-P, Schwang. See, here's the S&P. Do nothing sideways choppy chart. This is why it would be really stupid to trade E-mini futures unless you're scalping for 5 or 6 ticks here and there, which is very frustratingly difficult, having tried that before in my life. I like charts that go a little more something like this. Boom! Flawless victory. As a former video game person, I'm a big fan of trading combat. Anyway, dun 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 bum 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 ba-dum. That's an acceleration ramp. All right, look at this. The volatility is 48 to 55. This is one of the picks I've got for my Swing Scans members. I thought I'd give that to you as a freebie today. But look at that volatility. Look at the point range. This guy ran 48 to 55. That's 7 points. 5 plus 2, 7 points on a $50 stock. This is a 15-day, 15-minute candlestick chart. You want at least 10% range on these to trade. Here's another one. So that's TRIP, T-R-I-P. Another one, LHO. Look at this, a gap continuation. It gapped up. I rarely, at least in my own Interactive Brokers account and Ameritrade and Fidelity accounts, I will seldom, if ever, trade the day after a gap, because usually you'll see either a mean reversion pullback or a sideways congestion, or if the gap day is a large green candle day, you often see a small doji type uncertain candle day the day after a gap. So I wait instead for it to break cup pattern resistance, which in this case didn't occur. At least I had a little false breakout there. And that's why I use 50 cents above the high before I get in. And this guy starting to run up. This is LHO, the ticker. It's in Lima Hotel. Oh, Oscar, LHO. Trying to forget my phonetic alphabet there. I live here in Colorado Springs, so I got a lot of buddies in the military, and I live right down the street from the Air Force Academy, and certainly thanks to all of our men and women in uniform for their service, both in law enforcement and military. Anyway, the point is LHO, nice recent tail up here in the breakout. It's got a 3-day uptrend continuation in an otherwise uncertain market, so for that reason I like LHO. For those of you who trade cheap stocks, VKTX, a recent gap continuation runner. This guy gapped from a low of 6 up to 6.5, ran all the way up to just around 1080, 11, kind of whole number resistance near 11. So huge run in VKTX. By the way, if you do trade the inexpensive, even less expensive than this one now, under $10 stocks, be sure to try my Small Cap Scans advisory service. And that's our weekly top 7 list. Got a weekly video in the members area, and that's for stocks under $10. Really popular. This one's really taken off since I launched it. It was late last year, and I've got a bunch of videos that explain what it's all about and the benefits. I've got a sample members video there so you can see the quality and the professionalism. It's 7 charts under, and it's got a a $7 trial, so you can try it for 3 weeks for only $7. And if you stay on, it's $97 a month. But you don't have to if you don't want to. A lot of people do because the picks are so good. Anyway, the point is that Small Cap Scans. To get to that one, by the way, you go to Trade Mastery, go to the alerts, and go to Small Cap Scans New, because it's relatively new. Less than just about 6 months I've been running this service, and it's taken off because people are tired of the pop and drop stocks that you may have seen out there. They like I like consistent charts that have reasonably strong directional moves. So lots of videos to look at as well. But I like strong trending charts. That's the trick for any kind of trading, is strong directional charts. To avoid false breakouts, particularly important in the more hazardous cheap stocks, is you need to find charts that have pre-existing uptrend directional strength. So anyway, that's what I specialize in. I'm one of the world's experts in breakout, swing, and day trades. And Small Cap Scans is an advisory service, an educational service you can look at for that. Anyway, moving right along. So that's VKTX. That's another pick. Another really good one for intraday trading that I cover frequently in TradingTheOpen.com, my day trading room, and is also good now for swing trades, is Momo. And it surely got some momentum as it gapped up and continued up from a base of 42.50 to right under that 50. You may have remembered I always teach decade values, just like whole number points for intraday trades. Decade values are really key resistance areas for both swing and day trades especially. So anyway, this is my favorite pattern in the whole world, a small gap that continues up. I've taught traders how to use this since 1999. Nearly 20 years I've been in business teaching tens of thousands of the world's traders, and I've traded millions of dollars worth of real money stocks in my own accounts with proof. And the point is, this is my favorite pattern in the world, a small gap that attracts a good open range breakout volume and volatility on the open that spectacularly runs up, in this case, a whole 3 points, right? 46.5 to 49.5 with 50 as overhead resistance ceiling. But this is the right kind of chart for day and swing trading because of the profit potential in the point range, right? Much better than trying to day trade cheap, low float, $3 pop and drop stocks. It's much more intelligent to trade charts with big ranges. Another good example of an open range breakout runner recently, this past week, from my live room. By the way, how many of you guys like this new feature, the winner of the week? I need to expand this out to cover my other advisory services, alert services as well. But for now, I'm starting off with my two biggest and most popular services, Trading the Open since the year 2000. I've trained tens of thousands of people in my live room and other training that I provide online. This is our pick from the 30th, which was Wednesday. Back here, I said we go long if it gets over 51.30. And it ran up, and I called the exit right near the immediate top near 52.30 for a 1 point win. But does everybody see the small gap that continued for a consistent 1 point run? So the problem with using this approach, and I've seen people try it with cheap stocks, is that cheap like $4 or $5 stocks may gap up 10 or 15 cents and then only run 10 or 15 cents. And the only way to make money potentially with those charts is to trade thousands of shares, which is far too risky on the front end. What you want to do is trade charts where you can get a bigger run of 50, 80 cents a dollar out of it and manage your P&L correctly. So that's a good gap continuation runner that my Trading the Open members got. Here is a swing trading long that my Swing Scans members got in HFC. Anyway, this is this is my favorite type of chart pattern for swing trading. 45-degree angle, week after week after week, sustainable uptrends, because you can position size and scale into those. For day trading, I like small gaps that continue, like this guy. That was WLL, Whiting Pete, or this guy from yesterday. You can see Momo certainly got the mojo, got the Momo running for multi-point run. So that's another good sequence of patterns to look at. Big picture, our oil and gold sectors are doing nothing, so I really don't have much to report on those. If you look at Gold Corp or GDX, flat, sideways. Oil's soft and weak. It's been selling down. Oil's no longer in rally mode, so the oil trend has been broken. So I'm not trading oil and gold next week. I'm not putting on new trades in oil and gold next week because oil's been dropping. I like momentum charts like this one, a trip chart, LHO chart, recent runner VKTX, and Momo. But of those, I'd say the superior chart pattern would be, it's a LHO by an edge because the directional trend strength above all three moving average lines. We've got kind of a golden cross going on here. That's a golden cross, the 50 SMA cross the 200 SMA to the upside. That's a golden cross. Do learn things like your candle patterns, from my colleague Steve Nesson at candlecharts.com. Learn how to trade breakouts from people like myself and my colleagues, and learn how to identify good momentum breakouts in progress. Look for large green candles at the right side of a pattern. Look for gaps to continue most of the time. Right? Look for patterns in which the money is there, or the P&L would make sense to actually trade it successfully. So many traders get in trouble because you guys are trading crap charts. Like, I've picked on AT&T for my whole trading career because it continues to never fail to disappoint. A horrible chart. And oftentimes I'll get traders who are new to working with me say, they'll ask me about a chart like, well, Ken, where would you trade T? The answer is I wouldn't. I don't have an edge. I don't have an advantage. Only trade when you've got an advantage. Like if you're playing blackjack in a Vegas casino, only double down a lot of times. But you know, if you got an 8-3 and the dealer has a 5 or 6, you're going to double down on that. But if the dealer has an ace or a 10 and you got a 5 or 6, you're going to surrender, right? Well, as a trader, you don't want to surrender your charts. You just want to not trade crap charts in the first place and instead trade spectacular breakouts like this one. For our Forex traders, not much has been going on lately. The charts that I follow have mostly been quiet as of lately. The best breakout chart I can find for you is more of a pivot in the British pound to the Japan yen. It is forming a bullish cup, which is just okay. It's not my favorite. I prefer charts that wildly trend up and spike up and the rest of it. But this is a recovery chart with a nice big range breakout here is especially appealing in the British pound sterling to the Japan yen. So if you are a Forex trader, the pound yen is the best bounce chart for a swing trade. If you do trade Forex, I would suggest to you that this is more a scalper's intraday market than it is a swing trading market. I'm not seeing the kind of sustainable volatility that I saw in months past in most of the Forex pairs. So if you are a currency trader, it's much more a scalping market than a swing trader's market. That's strategically valuable intel. Okay. Match your trading style to the markets. Now, if the markets aren't giving you the kind of chart pattern you want, then don't trade. Only trade charts when you've got a clearly defined trading edge or an advantage. What else? I think that's about it. I'm a few minutes early. Let me see if any quick questions. Andy's saying I traded VKTX the other day, needed nerves of steel. Oh, cheers, Andy from Canada. One of my Canadian friends up north. People from Canada and Australia are like the two friendliest countries I've met. A lot of good people in there. Anyway, the point is, yeah, the cheap charts require a lot. It's paradoxical. The people who trade the cheap charts are the ones who should not be trading cheap charts, or they're trading for the wrong reason because they're cheaper. It's much smarter. The more intelligent way to trade, I would suggest, is that it's better to trade small shares of a more consistently strong uptrending chart, like this one or that HFC chart. Alright, it's up, up, and away. It's really important that you realize the math behind the chart patterns. Charts like this are perfect for trading Holly Frontier. Now, having said that, watch it sell off next week. No big deal, because we're not in yet. We're not still in yet. We want to wait until we're in from earlier. We don't want to go in right this second if you're looking for a new play. It's kind of expensive now up at 80 a share. But the point is, it ran nicely from 40 a share to 80 a share, right? What a chart. From 40 a share to 80 a share, it doubled. That's where the money's made as a professional trader. You want to really focus your energy on charts that have, what I call honest charts or clean charts. Much like people. You want people that are authentic and honest and work hard and are responsive, and therefore when you need them and they do what they're supposed to do, when they say they're going to, and how they're supposed to do with no excuses. As a trader, you want charts that similarly have like a piece of string that's been tied tight, a 45-degree angle uptrend continuation, so you could scale into it without major pullbacks. And I teach how to do that in my courses and my alert services. But these are the type of charts that winning traders are made of, right? This is a classic, perfect chart, right? WLL until a few days ago had been also a similarly strong recent uptrending chart. All right, I pulled back a little bit with the bearish engulfment here. Hammered out a low and then bounced to the upside. I don't like this shooting star. Well, bearish upper shadows here, so it's in trouble. But do keep an eye on WLL in case it does continue north of 55. But charts to focus on as a trader, and you have my word, I've actually traded millions of dollars worth of stocks. I know how to trade. And my most successful years versus unsuccessful, I found that the difference is trading strong charts consistently and then getting out at the first sign of trouble. So tight trading channels make sense. That's a good intelligent thing to look for. Also emerging volatility and To help avoid or minimize the incident rate of false breakouts, one of the things that I like is looking for high volume, large green candles at the rightmost side of the chart prior to putting on a trade. Like we have one in HFC, right? A nice big green breakout candle yesterday. So all the more the merrier to make sense of our trades, right? If you're struggling with the trader when it comes to consistency, I will tell you from my own experience, your experience may be different. Your mileage might vary, but my experience is start off with clean charts that are strong, uptrending, directional plays that make sense, and do much less speculative trying to buy bounces or pivot points or waves or all that crap. It's much better to trade strength on directional charts. The trick is they're hard to find, so that's why my business is built on finding these kind of charts for the world's traders. So I do all the visual scanning for you in my alert services like swing scans and small cap scans and chart scans and trading open. And if you're a Forex trader, be sure to get forexvideos.com with my colleague Peter Bain and myself. It's our subscription service, and we've got 3 new alerts each week for you in the members area, plus downloadable videos from our Vegas seminar and other events we've done online. Forex, F-O-R-E-X, videos.com if you're a Forex trader. And stock traders, be sure to follow the charts that make sense. It's up to you. Adversity demands action, and you got to figure out who to learn from that's actually consistent, who to learn from that has lots of video testimonials like I do, who to learn from that's got an industry reputation built on excellence and intelligence, and then partner up. We'd love to see you join our paid community here at Trade Mastering, one of my alert services. You're certainly welcome. I got a lot of new faces here today. So if you're new, stick around for the Saturday events, and you'll continue to get rockstar charts from me and see where we are #1, at least to my best of my knowledge, #1 in terms of registered attendees for these type of events. So thank you so much for being here. I appreciate it. I've got to run. I've got swing scans for my paid swing scans members coming up in just a couple of minutes. So until next time, you know what to do. Trade with passion. Trade with intelligence. Trade small size. Use tight stops. Trade the strongest charts. Make the numbers work out. The math is so much more important than the chart pattern. So make sure your unrealized P&L turns into realized P&L green in a way that helps make you more profitable. Okay? It's all about the money. So that's what I'm about. So I'm trying to help you guys make this. So y'all take care and thanks. I appreciate it. Yeah, you have a good weekend too. All these comments, I wish, again, I apologize ahead of time. I can't read off all the comments. They're kind of scrolling by here. It's just not enough time. Try and pick 1 or 2. See, loose end, I guess I never buy blood on the street like Buffett. But it depends on the chart. I mean, but there's usually cheap charts. I don't know. Let's pick on Harmony, right? HMNY. That looked like a bounce. I don't think so. It went from a $4 stock to a 50-cent stock, HMNY. So oftentimes weakness is bad to buy because it got cut times 10, right? Hey, it's bouncing, it's $4. I don't think so, Sparky. Now it's a 50-cent stock. Usually blood in the street type charts continue to bleed long after you think they're going to, right? And it's like, what the heck happened? So I don't like these kind of charts. Personally, I like charts that go a little more something like this. I like to buy high and sell higher. This, by the way, is a final chart pattern, one of my favorites, Baby Bear, Mama Bear, Papa Bear, or a large venti grande coffee. For those of you who are fellow Starbucks fiends, you got small, medium, large candles in progression. That often leads to a mean reversion pullback, but then a continuation to the upside. So we'll see if we get the mean reversion in trip, the pullback, or a reversal. But often this will eventually lead to a new high breakout. So after it's done a 3-candle break, you'll often see this is not a 3-line break technically. It's very close to, kind of sort of close to, but not quite a 3-line break. When I see increasing whole real body candle heights, I often expect that at some point it'll exhaust off and pull back, which is healthy for it, but then continue on up at some later point. So anyway, I hope that helps visually pick out the charts that make sense, that are intelligent, they're focused, they're more consistent, and it can help you trade better. So thanks so much for being here. I'll see you guys next week. Bye for now. I wish I could stick around and answer all the questions, but I've got swing scans coming up in 5 minutes, so duty calls. If you're a Swing Scans member, bring your questions there and I answer them there. So for those of you who are Swing Scans members, don't ask questions here. Save them for the members area, members webinar in a few minutes coming up. So until next time, trade smart, have an amazing summer, make some money out there, and do well. Goodbye.